By the way, I got to ask you, how the hell did you get Will Smith and Kevin Durant?
Both of them really believed in the idea of, community-based investing, which was why what we were building just immediately clicked for them. So again, it goes back to Y-Combinator being a really great place where you get to meet a lot of investors and, automatically get that clout.
What is the secret sauce of being able to go raise $15 million, whether it's for real estate, for tech, or whatever?
I honestly think everything goes back to storytelling. People are watching. I think that's the thing that a lot of folks don't understand is like they think, okay, I got to go build in the dark. Everything needs to be perfect. It ultimately makes you so much more relatable and trustworthy.
Yeah.
And that's what actually converts into real dollars.
What's up, guys? Welcome to another 11 out of 10 podcast where we do it bigger and better every single week. We are here today with Stella Han in beautiful Palo Alto, Silicon Valley, to talk to a real estate tech founder that in the last 4 years grew her company to over $100 million valuation. She's got investors including Will Smith, Kevin Durant, Fifth Wall Ventures. You were in Y-Combinator, the number one most prestigious tech incubator in the world. That they produced Airbnb, they produced Stripe, some of the biggest multi-billion-dollar companies in the world. You've raised over $400 million through your platform. And today we're going to dive into your story and see what we can learn from you as a tech founder and also someone that works in real estate. So without further ado, welcome, Stella. Thanks for joining us today.
Thanks for having me. Excited to dig in.
All right. So you have had some phenomenal success. You started your company in 2021. What gave you the idea? Actually, why don't we just back up a little bit? Fractional app. Explain to anyone that's not familiar. If you've been under a rock, you don't know about fractional app. For anyone that doesn't know what fractional app is, explain what fractional is.
Yep. So fractional is a platform that allows operators to legally raise money from anyone. So both accredited investors and unaccredited without having to go set up a fund, a syndication, and deal with the crazy red tape that comes with that. So it's really a story around having access and ownership where a group of like-minded people can go own and invest in anything. And we started out with real estate, obviously, because the demand here is huge and people have been raising money to go buy all sorts of things as a group. And we're here to make the legal, the back office just as easy as clicking a button.
I love it. Okay. And like, I remember you showed me a demo. It's really, really slick. Like it connects with QuickBooks and everything. Explain like, what is the process? If I'm trying, let's say I find an apartment building and it's a great deal. Right. It's a great deal, but I need $1 million. I got to go raise $1 million. What does it look like to go and raise $1 million on the app?
Yeah. Well, traditionally, if you were doing that, you would go find a securities attorney, pay them, 20 to 40 grand just to get these, crazy 100-page documents that, nobody knows how to read. And then you're pretty much, blocked around who you can actually raise money from, right? A lot of times you got to raise from the rich and wealthy people only.
Accredited investors,
yeah,
right?
And, not everyone has access to that, right? And where we really saw the opportunity is actually because, I'm from the Bay Area, this concept of an investment club is very popular where actually in college and getting out of college, a bunch of buddies and we were really into stocks, crypto, even investing in startups. And we were like, why don't we go pool our money together and we look at all these different deals and then collaborate on what we think is a good idea.
Love
and make bets on those.
Yeah.
And when you do that, the SEC, Uncle Sam does not see an investment club as a security because everyone is actively participating. And that's why, when you form an investment club with your buddies, you don't need to go find a crazy expensive securities attorney and deal with all that crap, right? So that's really when we were like, well, why doesn't this model exist in real estate? It's super sexy out here in the Bay Area, but people don't do this when they're raising money for real estate. So we basically took that legal structure and then built a tech platform around it where, anyone can create an investment club on the fractional platform. They just describe essentially like what their buy box is, right? So you mentioned multifamily. Like my buy box could be, I want to go buy multifamily in Arizona. It's got to hit, this cap rate, this cash on cash, whatever it is. You put that as your club criteria on the platform. And then we create a custom club link you send that to everyone in your network. You post it on social media, whatever it is, right? And people who believe in that same criteria and have the same vision as you, they're all going to come in, send in their funds directly through the platform. And then we create the LLC, all the legal docs, the entire, banking structure, everything back office, tax filings, K1s, profit distributions, all that we handle on our end. So it's really easy for you to share your vision, create a club around it, and just bring people around you that want to do that with you too.
I love that. I absolutely love that. So is that how you kind of came up with the idea? Is you had one of these investment clubs when you're in college or after college, and then somehow, like, what's the origination story of how you came up with this idea?
So I actually got really burned myself raising capital for the first time when it came to real estate. Yeah. I saw a portfolio of 22 duplexes out in Atlanta.
And this is like after college?
Yeah, after college.
At some point, you're working as a software engineer at the time and decided, hey, I want to do some real estate exposure.
Exactly.
So how did you end up, by the way, being interested in real estate? Was that you had family in real estate, or?
So both of my parents, they are actually software engineers by trade as well. But they flipped houses while I was growing up. So I was basically...
So you had some exposure.
Yeah, I was the chief, Asian family labor.
Classic. Yep.
Classic, yep. So, but I do think, on a positive note, right? Like that really left a seed in me in not only wanting to do like stocks and crypto, which is your, classic, kind of tech person portfolio, but wanting to build hard assets, have actual cash flow. So I was really interested in the real estate side too. Obviously, Bay Area was not going to work for me as a new grad. Like, you need $1 million to buy a shack, right? And that's not the kind of money that I had. So I was like, okay, well, let's do out-of-state investing. I ended up picking Atlanta as my market, was just buying single-family homes with, my own capital. And, as a new grad and then a few years coming out of college, you don't have that much of your own capital. So very quickly, I was depleted. I was like, okay, well, if I want to buy more real estate, I need to raise money. How do I do that? So I asked everyone around me and they said, well, we know you do a syndication or a fund. Like that's the way you raise money in real estate. So I was like, okay, I guess I'll go do that because that's what everyone is saying. So I found this portfolio of the 22 duplexes. I needed $1 million down to go buy it. So I was like, okay.
What was the total purchase price for this thing? And
it was
the after repair value.
It was 3.875.
3.875 was the purchase price. You put $1 million down. What do you think it would have been worth after stabilizing it?
So it was more of like a turnkey play.
Okay.
Yeah.
So you're looking for cash flow.
Yeah, looking for cash flow. It was also my first bigger deal, so I didn't want too much rehab going in just to not completely sink the ship. Yeah. So it was more of a rehab, more of a turnkey play. So needed to raise $1 million, and I was told to go do a syndication. So I did not know better. I had already put the properties under contract, put my EMD, and now I'm pressed against the clock, right? And the securities attorney is like, okay, well, pay me $30,000 because I got to go do the paperwork. So now I'm coming out of pocket another $30,000 on top of the $25,000 EMD that I already put down. And then they took 4 fucking weeks to go write, 100 pages of documentation. And by the time that was done, I had 2 weeks left before my close of escrow to actually go close the deal. And as a first-time capital raiser, $1 million in 2 weeks was
pretty tight.
Yeah, it was pretty much mission impossible for me. And I didn't realize that I would be gate kept at 35 unaccredited investors when you're doing a 506B as well. So a bunch of my family and friends who wanted to invest, they also couldn't get in because they weren't accredited. So couldn't raise $1 million and lost $55,000. And that was my, first into all this.
Yeah. So all of that $30,000 of legal work you can now do with a click of a button.
Yeah, exactly.
It seems very obvious. And there's a lot of it seems kind of similar to there's that other app that does allows you to do fractional investing, like artwork. Is it similar kind of like Masterworks? Is it similar kind of like legal framework or is it completely different?
It's actually completely different. So traditionally, the idea of, crowdfunding or being able to buy shares of any sort of asset class, right, including art, it's done still in a securitized way, where a lot of times, a company or whoever is the operator, they buy that asset, they're making all the decisions about the asset, and then they're selling shares of that. And because they are operating the asset and, the investors are expecting a profit without doing any work, that is still viewed as a security in the eyes of the SEC. So all the regulations and all the filings and all the red tape still applies. Versus what we're doing at Fractional is, we saw a lot of opportunity in community being a big part of the DNA of operators, where they actually want to be involved in some level of decision making. So one phrase that I really love, which actually Pace Morby kind of coined for us. He uses Fractional, and he loves the idea of learning and earning. And I think that's like the perfect way to describe an investment club, because you're not here just to put $10,000 in a black box fund and pray that someone's going to make money for you. It's like, we actually really believe in this business thesis and this investment criteria. So we're going to pull our money together and then look at those opportunities as a team and actually learn the process and then make decisions on whether or not we want to deploy our capital into, property A versus property B, or maybe we do both. I think that experience is really what differentiates what we're doing in this space.
I like it. I was listening to an interview with Elon Musk the other day, and someone asked him, they're like, hey, if you were zeroed out tomorrow and you had no money, how would you start over again? He's like, well, I would go and I would find people that had money. I would convince them to give me their money, and then I would have money because I'm very skilled. And I would say, hey, give me your money and I will give you more money back. And it's just like so obvious. I think, especially in our space, we're big in the wholesaling space. A lot of guys get started wholesaling and they kind of get capped. They get stuck in the wholesaling because they're like, oh, I just don't have capital. Like if I were to take all these things down, it would require so much capital. And it used to be that the whole skill of fundraising, getting other people's money, like all the mechanics of like setting up a fund or syndicating, it was a big barrier to entry. So basically what we've done is kind of remove that, where like anyone that wants to go branch out and take their skills and actually go match them with capital can do that in a very easy way.
Yeah, exactly. Like anyone that's got a network of any sort. I mean, everyone has friends, right? Don't your friends want to make more money with you and learning from your expertise? Like that should be a yes for any skilled individual.
Yeah, 100%. Right? Like on the investor side, like people always ask me, and they're like, oh, Robert, like how big is your portfolio? But like I completely got out of real estate because I'm all about focus. I'm like, if I'm going to run a software company, you can't run a software company and a real estate company at the same time. You got to have extreme focus. So after like 6 months or so running both in parallel, I was like, no, I have to get out of real estate. But I'd love to be able to just like put some money to work. I do it sometimes. Like our mutual friend, Steve Trang, he had an idea. I liked his idea. So I was first money in on his company. I saw he's raising on your platform at double the valuation I got in at. So yeah, it's great. So you're now, actually, I don't want to jump too far ahead. You came up with the idea, and then you got into Y-Combinator, which, guys, if you don't know Y-Combinator, that's like, I think it's like 10 times harder to get into Y-Combinator than it is to get into Harvard. Very low acceptance rate. I actually was interviewed 3 times. Paul Bucknight did my last interview. He's kind of a dick, but I know he's right. He came up with the phrase, don't be evil at Google. He was like employee number 11. He was the one that invented Facebook newsfeed. On my last interview I did with him, it was on Investorlift. And he told me, he's like, Robert, you're a fucking idiot. Well, first of all, he was like, it's so impressive, like the traction, the growth rate you guys have. It's just absolutely extraordinary. He's like, but you're a fucking idiot. I'm like, why? He's like, you're charging people for the platform. You should just make it free and then make money on the loans and ancillary services. I'm like, yeah, I know that, but like I have to pay my rent. I have to pay my engineers. Yeah. So like, if you write me a check for a few $1,000,000, yeah, I can make it free. But until I do that, like, there's the Silicon Valley playbook, and then there's like the reality, I gotta pay my bills playbook that the rest of the world operates on, and I was still operating on the way that the rest of the world operated. So yeah, interviewed 3 times, never gone in. I did do the online version, which they opened up during COVID. So you got in, you did it in 2021. How was that experience? I think the deal is $150,000 for 7%. Is that still the deal, or was it a different deal? Or
that was the deal that we've got. Now they've changed it where it's a larger check for even more equity. Yeah, but I don't think what every partner says is correct. So, I
I actually think he was correct. I was just like, yeah, just give me the money.
But I think it's like, honestly, like as a VC-backed founder, I find it incredibly impressive when I talk to a founder who is completely bootstrapped, because the risk and, the freedom you have is completely different. And I feel like it's actually even tougher to do like everything from scratch, completely bootstrapped, because every move has to be so calculated and so, precise. And in being able to, make those decisions super quickly, it's different.
You can't, there's different doors. There's one-way doors and there's two-way doors. So when you make bets, sometimes you have to go all in on the bets, but you also can't be wrong.
Yeah.
Because if you go all in on a one-way door and the bet doesn't play out, you zero out.
Yeah.
Versus if you got a few tens of millions of dollars sitting in the bank, you got some dry powder there. But on the flip side of things, you have complete control. So you have like complete decision-making authority, which is nice. So you liked the experience there? Did you find it was useful? Was it worth the deal? If you were to do the deal again, the 7% for 150, would you do that deal again? If someone's watching this, they're considering Y-Combinator.
I think as a first-time founder, then the brand and the way of being Y-Combinator backed, I think it is a price that's worthy of paying. I would say that was honestly the biggest value we got out of it, was for the rest of the world to know that we're a Y-Combinator backed company and we're YC backed founders. And that definitely made raising more venture dollars easier, because now you have credibility.
Yeah,
I think that was the biggest win. Yep. But, they're not here to actually teach you how to run a business and understand, all the ins and outs. That is not really the value that I got. We were pretty much just in the pressure cooker, heads down, just grinding away at building, making mistake after mistakes like that. I think that just is something that you have to figure out on yourself. Yeah,
absolutely. A lot of people say that Y Combinator was really good when Paul Graham was running it, and then it's kind of like gone off. Like there's less like involvement from the partners now. It's more like just figure it out. Do you feel like that's true? Are the golden years of Y Combinator behind Y Combinator?
I hear that a lot.
Yeah.
I've been hearing it, since we were in the batch where it's like every batch is getting bigger. There's crazier and crazier and weirder startups, but I still think it's like they find just the right amount of gold to be in each batch where it somehow ends up working, just in the grand scheme of things. And I'm a big believer of like you are responsible for making the best out of what you have.
Yeah.
So that's always how I operate. It's like, okay, even if as a whole ecosystem it's not what it used to be, how do I milk the most out of it to my own benefit?
Yeah. And most people don't know this, but the CEO of OpenAI, Sam Altman, he got started first as a Y Combinator company, a startup, which actually didn't go anywhere. It was a complete flop, but he managed to coerce someone at Sequoia Capital into coercing another company to acquire his company, which they then just like shelved. It basically went to zero. Apparently he was completely inflating his user numbers. He would like never say how many users he had. And then came out that he only had like 1,000 users. It was one of those old like check-in, like the whole like the check-in apps where it's like, that was like Foursquare. It was one of those. So he got a sweetheart deal. But then after that, he was president of YC for a bit. Was he still there? Was he still around when you were there in 2021?
It was Michael Siebel when I was there.
Yeah.
I mean, I feel like all of the partners, they're very great at storytelling. Like they know the art of the craft when it comes to that. And that is very important, even though it's not the day-to-day operations, but, some people are really good when it comes to day-to-day, but then they can't sell what they're building and, that ends up flopping too. So, you take the fortes of what they're good at and then, you use that to your advantage to get more leverage.
Love it. So after you came out, they have demo day. Did you raised a $5 million round first? Was that right out of demo day?
Yeah, right out of demo day. We, unfortunately, didn't get the full YC experience. So we started fractional, got into YC. It was winter of 2021. So it was pretty much peak pandemic. So we didn't get to be in person. Like everything was remote. So, it wasn't like physically show up to a room. There's a sea of VCs and you do like real life Shark Tank. It was more like virtual Shark Tank, which, takes away a little bit of the drama. But yeah, that was, how we ended up raising our seed round, which was $5 million, including a Y Combinator's check.
And then within like a year or two, you raised 15 at 100 million. That was just recently, right? Like in the last year, you raised
Yep.
15.
Yep.
Congratulations at
Thank
100
you.
million valuation.
Big milestone for us.
Yeah. How did that feel?
Honestly, I feel like, when you're a founder for a while, you feel less of the emotional roller
Yeah.
coasters. Like in the beginning, I used to think, oh my gosh, like praying, like if I get a seed round, like I'm gonna be so happy. This is
Right.
gonna be amazing. And like you have such a high. But after living it for a while, I feel like older version of me would have been like thrilled,
Right.
like out of the planet thrilled, right? Like if I raised 15 million on $100 million valuation. But
Yeah.
when it actually happened, it was like, great. Like we got this win. Now we have more gunpowder. Back to work kind of
Back to
feeling.
work.
Yeah.
Yeah. Okay. Wow. Before we started filming here, I asked you what you're the best in the world at. And you said, I'm really damn good at fundraising, which makes sense. Being CEO of a fundraising app. For people that maybe haven't fundraised before, you've obviously done it very well, closing last round 50. By the way, I got to ask you, how the hell did you get Will Smith and Kevin Durant? Like you
I
just a family office, or you just like you know someone that knows Will Smith pre-slap you mentioned
Pre-slap,
you knew
I
Will
didn't
Smith,
mention that.
you got funny pre-slap, and Kevin Durant. How'd you land those two?
So I actually met their family office fund managers at demo day.
Okay,
So they were there, and both of them had actually backed this other company called Public
yeah,
a few years before. And Public back then was a social, stock trading platform. So both of them really believed in the idea of, community-based investing, which was
yeah,
why what we were building just immediately clicked for them. So that again, goes back to Y-Combinator being a really great place where you get to meet a lot of investors and, automatically get that clout.
yeah. Their family offices are pretty active. I noticed. I was just had my other buddy here in the real estate tech space, Josh Stetch, the CEO of Sunday, and he was able. I think he got. I know he has Will Smith. I don't know if he got Kevin Durant as well, but yeah, their family offices seem to be pretty active. So okay, circling back. Sorry, that was a little side note because it's pretty cool having them as investors. What do you understand about fundraising that other people don't? What is the secret sauce of being able to go raise 15 million bucks, whether it's for real estate, for tech, or whatever?
I honestly think everything goes back to storytelling, which is also why I really love the idea of building in public, because it means you get to always tell the story and people are watching. I think
Yeah,
that's the thing that a lot of folks don't understand is like they think, okay, I got to go build in the dark. Everything needs to be perfect until I go out there and tell people, oh, I've got this really cool real estate project now, or, I'm finally building a company and this is what it's about. But by then, it's like you've already lost, months, maybe even years of lead time where people could get to know who you are, do the know, like, and trust with you and
yeah,
see you, like almost like live through your experience, like your hero's journey of
yeah,
how you're evolving, right? And I think that is so powerful where that's why for me, whether it's real estate investing or building fractional, I just like to be extremely open and candid around, all the evolutions of myself and the company. And, even as a real estate operator, my wins, my failures, like all of that, it ultimately makes you so much more relatable and trustworthy.
yeah.
And that's what actually converts into real dollars.
Love that. I love that. I remember we talked a few months back, and you mentioned like you got to have a process. Like, what did your process look like?
Yeah. So I like to have a lot of conversations
Yeah,
before I'm officially in fundraising mode. Like
yeah,
my belief is always you're always capital raising. There's never a
yeah,
time when you're not capital raising. Even though there's no, let's say you don't have a specific deal, that's fine. You're still capital raising because every opportunity you have to talk to someone that is, building another layer of know, like, and trust that
yeah,
leads to an eventual dollar. So I like to think about capital raising as a sales funnel, right?
yeah,
Like it's like every engagement you get, whether you're telling your story on social media or you're going to a conference or you're meeting people, like that is top of funnel, right? And then that needs to convert into some sort of investor list that you got going on where you're also constantly nurturing them about everything that's happening in your journey.
yeah,
And then once you actually find a golden idea, a golden opportunity, it's not like I'm begging you for money. Please invest with me. It's more like, you've known me for so
Yeah.
long.
I said I was going to do this last year. I've done it. Here's what I'm doing next. You want to be a part of it?
Exactly. Now it's like
Yeah.
you're giving them the privilege and the access to do business with you. I think that shift in mindset is also huge. And people see that and they get all sorts of FOMO if they know, you've been building in public and other people are also watching you. So now they're running to you because they don't want to lose their opportunity in that spot of being able to do business with you.
Yeah. It's like I always believe that there is infinite capital out there. The real scarce thing is talent.
Yep.
Talented operators are able to take capital and put it to work. And I was listening to an interview yesterday with Tony Robbins, I think on the Chris Williams podcast. I'll see if I can clip it in here. But he was saying how, if you put like $1 million into the S&P 500 30 years ago, you would have got a 9% return per year. But all the money is in private investing. And like in private equity, I think the annualized average returns over the last 30 years were like, I don't know what he said, it were like 19% or something. And he ran the math on like what you would have 30 years later if you just did public market investing versus private market investing. So for people that like to be hands-on and like actually get to know the entrepreneur and get to know a sector, whether it's real estate, whether it's whatever, that's where the real money is. And I'm glad. I think these funds are right. The thesis that like those markets will open up is true. 100%. If you look at companies don't go public anymore. In the 1980s, there'd be thousands of companies that went public every year. But there's so much regulatory frameworks and so much, all these rules and regulations and all this bullshit that like no one's going public anymore. It's just way too expensive. So all the returns are in the private markets. I think this is why have you heard about Texas Stock Exchange?
Yep.
Yeah. And as soon as Texas Stock Exchange launched, New York Stock Exchange and NASDAQ had no choice. They had to move to Texas.
Yep.
Because they knew Texas Stock Exchange would have way more of a competitive advantage just by getting rid of some of the red tape. So, I love it. I think you're tapping into a massive need in the market. Okay, so this year real estate markets have been dog shit, right? Like if you're watching this, you're in the real estate markets. Congratulations for surviving the worst 2 years since the mid 1990s. Give yourself a pat on the back. So you launched this thing. Real estate markets have been complete dog shit. You've obviously got some traction. You guys raised over $400 million on the app. But this year you're tapping into stuff beyond real estate. Talk to me a little bit about that.
So we always had the bigger vision that, people should be able to raise money, co-own any sort of asset class, right? Similar to how you even brought up artwork in the beginning. And, we started out with real estate because that was the problem that I faced. And, it was very obvious that there was a lot of demand here. But it was never the, end game to just stick in here. And what we ended up getting into more recently, I think it's quite tangential to real estate as well, is that people are now owning simple businesses, and then that has been evolving into more complex businesses as well. And a lot of it, I think, has been, really triggered and kicked off by the whole, silver tsunami, baby boomers are retiring. And then you've obviously got the influencers like Cody Sanchez who are, being very vocal about all the opportunity in this space, right?
Yeah.
So all of a sudden, we see our traditional operators who used to only operate in real estate, they're now, wanting to buy laundromats. Pace is doing this whole like car wash thing, right? And we're like, whoa, where's that coming from? And they're like, yeah, we really believe in this. Like, we want to capitalize on this new trend, this new wave. Hey, we need to raise money. How do we form a club of car wash enthusiasts that want to go buy car washes and operate those, right? So that's where we, plugged right in, and now seeing a crazy, evolution where now entering into this new vertical. And it's honestly been so much fun. Like, we witnessed someone go buy a bunch of candy stores because they're like, Warren Buffett loves See's candy. Like, that's his whole strategy.
Huge profit margins. You're just selling sugar at 99% markups.
I know, you're selling addiction right there, right? And they're like, we want to go buy a bunch of candy stores, 30 of them, roll it up. And it's essentially, mini private equity. And I'm like, that is freaking genius.
I love this. I'll tell you a story. A couple weeks ago, I had a cold call that came in, and the guy left me a voicemail. I called him back. He was a guy here in the Bay Area. He had just graduated from, I believe, Harvard Business School. And it used to be that people would graduate Harvard Business School and they'd go work for a big private equity company or one of the big four consulting companies, or they'd go work in finance. And what he was doing instead, which I've heard a lot of people are doing, is instead of going and working for someone else, they'll go get capital, right? Go raise from someone that has capital, and they'll say, hey, look, I'm a smart business person, and I'm going to go acquire a company and run it. And you could be my financial partner. So this guy had raised $50 million with the express purpose of buying a startup that had product market fit, and then building it up and then retrading it and selling it. I'm like, that's brilliant. He only had $50 million, so I said, sorry, you don't have enough money to buy my company, but best of luck to you, and I'll let you know if anything comes your way. But I think there's going to be more and more of that, especially with all the boomers that are now trying to get out of these cash flowing businesses. Those businesses typically were not liquid.
Yeah.
But now, like, you see the private equity guys. Do you know who owns the most private jets in America?
No, who is it?
Right, a lot of people think it's the tech bros or the finance bros. It's not. It's home services.
That makes sense.
Home services business owners is a percentage. They own the most private jets in America. And the reason why is because private equity has been rolling them up. They buy a plumbing business, they figure out how to run it twice as efficient, how to make it twice as profitable. Most plumbing businesses have no tech, they have no CRM, they have no follow-up sequences, they have nothing. They come in, they just drill it for efficiency and net promoter score and take all the like a master's degree level and in Silicon Valley level shit and apply it to these mom and pop businesses. And then they just start taking over market share and they buy out. It's like, sell to us or we're going to put you out of business. So they've been doing that. It's been big for the last 10 or so years. But what's interesting now is like just average Joe's doing this, realizing that, hey, I could do it. Why can't I do this too? Like if I were watching this and let's say I was in my mid 20s, early 30s, whatever, the older generation is not digitally native. They're not, especially not AI native. So if I got really good at using AI and leveraging AI in a business, what I would do is find a business where I could go apply AI to make it twice as good, go buy one, apply it there, make that kind of the case study, and then go on an app like Fractional and be like, hey, here's my case study. I bought this candy shop for $100,000 and now it's worth $500,000. I'm going to go buy 10 more and then go raise the capital. So you're starting to see more and more of that.
Yeah, we're starting to see more and more of that. And it's so funny because I have been, watching from the sidelines of, more regular people buying these, smaller businesses, applying technology, completing multiplier effects on the revenue, on the scalability of that. And I'm like, man, I want to see how this works. I want to get in. So there was a laundromat club that was going on Fractional. And I was like,
jump in.
Yeah, let me jump in and be a part of the club and see what's going on. So we actually just bought one of the largest laundromats out in Utah, and now we're going to go acquire another one. And
Amazing.
The idea is to buy a ton of these and roll it up. And it was so funny. I shared on my social media that, I went in as, one of the co-owners and bought a laundromat, and people were giving me so much shit. They were like, you got a computer science degree just to go do laundry? What's wrong with you? And I'm like,
it's a huge business. One of our sales guys, his uncle used to run the laundromat that did all the cruise ships in Fort Lauderdale. The guy's worth tens of millions of dollars from doing laundry.
That's what I'm saying.
Yeah, I mean, the least sexy businesses are usually the most sexy, really. Cash flow is cash flow. Who the hell cares what sector it is? What percentage of the deals on Fractional you think are real estate deals versus deals outside of real estate?
It's still mostly real estate right now. I would say around 80% is still real estate. The business vertical, it's still relatively new for us, but it's definitely something that we really want to step on the gas this year, especially that vertical itself really growing a lot. And obviously real estate has been tough, right? The last few years, and hopefully things shake out for the better. But that was always the original intent, was we don't need to be married to one vertical, right? Fractional and the idea of raising money, forming clubs to go do anything is really the overarching idea and concept. So I really like the flexibility where we can make these adjustments and, jump onto what is trendy and what people are excited about right now.
Yeah. And I think the other, I mean, especially being here in Silicon Valley, like I imagine like you could actually do like I know you're doing Steve's Raise, which is a tech play. You could do a lot more of those because it used to be. I think the VC space is going to get crushed in the next couple of years, and I'll tell you why. It used to be that a few years ago, if you wanted to build a company, it would cost millions of dollars just to get off the ground, right? Because software engineers, especially in this town, are so freaking expensive, right? So you would need a few $1,000,000. But today, anyone, even if they're not a software engineer, can vibe code up a product in a weekend over a bottle of wine and a bottle of Adderall and come up with something that used to cost millions of dollars. And we're seeing more and more and more of this. Like Sam Altman recently said, like, we think there's going to be the first unicorn single person tech company in 2026, which I believe. But when founders don't need as much capital because they can use AI to just vibe code shit up and test so many things so fast, the demand for venture capital is going to go down. You don't need millions of dollars anymore. You could probably just get like $100,000 and build something.
Yeah.
Have you thought about going more into that sector and like getting more like startup founders to like do kind of like angel type rounds on the platform?
Yeah, that has definitely been something that's really interesting to us. And even for me personally, because you're exactly right? Like back in the day, even when we were in YC, one of the hard rules that everyone said was like, you've got to have a technical co-founder. Ideally, everyone on the team comes from a technical background because that's what you needed to, go build an actual tech business that was going to have these, 100x, insane multipliers, right? But now it's like, you don't need that, which is why, Sam is saying solo founders is probably going to be more common and where they will have amazing exits. And because it's going to be less expensive, I think whether or not a founder or a company makes it or breaks it becomes more around distribution.
Yeah.
And I think that's where the community round, like that idea of it, where you can have a community round of, really strategic, maybe it's your core, customers, right, that have, let's say $25K each, right?
Yeah.
It's like now you don't need the gunpowder of a VC that needs to come in at, millions of dollars to help you take off with your company. You maybe just need $250,000, right? Well, of $250,000, do you got 10, super users of your platform that really believe in it?
Yeah.
They use your product day in and day out. They likely have really strategic advice for you, and they're going to be that word of mouth that can help you take your company to the next level, right? Well, go do a community round. You just need 10 of those people to come in at $25K, which I'm sure a lot of people would have.
Yeah.
And all of a sudden that can, kick you off. And it's actually more strategic than, VC dollars who a lot of times VCs are not actually real operators, right? So they can only give you very hand-wavy advice.
Yeah, versus like if you're selling to your, like one of the thoughts I've always had at Investorlift is maybe I'll sell some shares to my customers. Like I always have customers all the time. They'll buy a license, they crush it, their numbers are like double on their first deal. And they're like, Robert, can I buy some shares in Investorlift? And I've always been like, no. But I've always thought it might be a good idea to like allow people to buy some shares in Investorlift to give them some skin in the game where like the community owns a piece, so they're invested in the success, and then take that capital and reinvest and make it even better. Because it's not about how big your percentage of the pie is; it's about like how big can you make the pie.
Right.
Yeah, something I've thought about. If you're watching this and you want to buy some shares in Investorlift and you think I should do that, maybe I'll throw a few on fractional. Just do like a small little offering and see. But I would want it to be like my customers. I'd want to like I wouldn't want to just like have random Joes. I want to like restrict it to my customers somehow.
Oh yeah, it'll be an exclusive
invite
strategic,
only.
Yeah.
Can you do that? Can you have like private investing clubs?
Yeah, you definitely
Invite
can.
only?
That's actually what Steve and I are doing. Making like an angel. We called it the Legends Launch Club because we're like, this group is gonna back legends in the real estate space, and obviously Steve is a legend, so our group is gonna go back objection proof AI as one of the angel investing groups. And yeah, I mean, it's very exclusive. Like Steve is talking to people that are his like super fans. They already use the product. They're doing crazy testimonials and, giving him a lot of feedback. Like think of it as like almost like a board of directors, right?
Yeah.
That have equity in your
Has
business
some
and
skin in
help.
the game.
Yeah, exactly.
Okay, so I like this. Now, where you could go with this too, because you connect with the QuickBooks, right? So you connect with the business's QuickBooks account, so all the investors can see the financials for the business directly through the platform. Is that correct, or how does that work?
Yeah, so we do everything back office. QuickBooks is, people use that a lot for
Yeah.
their day-to-day operations. So, essentially they pass the day-to-day information to us, and then we can calculate from a club perspective, whenever there's, let's say, profit distributions, right? You've got, let's say, 80 investors in your club.
Yeah.
That's going to be a shit ton of work if you have to manually calculate how much of the cash flow everyone should get, and then you're cutting 80 investors a check each. Like,
Yeah.
that's a freaking nightmare, right? So what we're doing is, we basically take the end math of what's the total distributions the club should be getting, and then we calculate pro rata how much each investor should get based on their ownership, and just automatically send it to their bank account.
I like this because with that data, the other thing you can do is like, there's a lot of people that are like, oh yeah, I'm gonna, Grant Cardone famously gets sued all the time for promising returns. You can't promise future returns, you're gonna get sued, but you can talk about past returns that you actually did realize. So like, have you thought about having like profiles where like, as people are raising capital, like you can see what the net returns are for investors, like having it so people could like showcase that on a portfolio, like, hey, here's the last 10 real estate deals I've done, and by the way, check out the returns I've done.
Yeah, so that's actually one part of the product we're building right now is, essentially creating this public profile for all these operators that have a lot of clubs going on, and on top of the returns, also showing, the decisions that the club leader and their club members made as a group, because I think that's also really fascinating, right? It's like if you had a criteria where, you wanted to go buy, let's say, like co-living properties out in Arizona. Well, what deals did you actually underwrite, and
Yeah.
what deals did you actually pick, right? Like, I think that decisioning, that's what gets really interesting, where if I'm considering what clubs I want to join next, I want to see,
Was the decisions that were made and the impact of those decisions.
Yeah.
That is interesting. Yeah. Where do you see this going? Like, I'm sure you have a grand vision of where you imagine this app ends up 10 years from now. Do you have a big vision for it? If so, what does that look like?
Yeah, I mean, the more immediate one is, we obviously would love to see a world where anyone who is passionate about anything and there is a group of like-minded individuals, they are empowered to pool their capital and run that business together as a group. And then I think there's, so many layers above that where, because an investment club is actively running a business together, it's like, what can you abstract from how the business is actually ran, how the decisions are being run, where you can almost create almost like a business OS that is, designed completely around a specific club and its leader, right? Like, let's say Pace, he does a lot of private money lending right now, and people join his private money lending club because they want to learn and earn around how you can actually be a private money lender, and they want to see how he's underwriting the deals and, ultimately approve the ones that Pace thinks is a good idea, and that way they're learning the underwriting process. So, let's say you don't have $20,000 to actually be in the club with Pace, but we're tracking all the decisions that Pace and his club is making around, like, how do you actually operate a lending business?
Yeah.
I think just that operating system where it's like, I can now click a button and I get to see I get my own framework of like Pace's lending business, and then I get to add, whatever I want to make it my lending business.
Yeah.
I think that's like a whole other world that we haven't explored yet, where it's like an extension of what we're doing now.
Yeah. You capture some of the decision making if you train in AI.
Exactly.
There's some interesting angles there. Very cool. So how do you feel about the real estate? Trump just came out in Davos this morning, gave a big presentation. He talked about housing, banning institutional investors, dropping rates, trying not to tank the real estate market. What's your take on where real estate markets will go in 2026?
I mean, I think it'll take a while before, we see some real truth and facts behind, how things happen. But, overall, I do think it's going to be a net positive for the retail investors. I do think there's definitely going to be more and more need for, operators to be creative when it comes to deal structure in order to survive. Because, just from what we've seen, it's like the government has tried to make so many adjustments. Some of them have real impact, some of them don't. And the rules and the regulations, they're changing all the time, where if you don't know how to be creative, whether it's deal structuring, financing, or whatever it is, it's really hard to have like one tried and true method. So that's like the mindset I'm getting into, is like, I'm not getting married into like any specific thing. I need to just
more
like,
general.
always have my wheels turning, where I figure out like what are all the different knobs that I can turn to make a deal work.
Yeah, creative has been really big, especially in the last couple of years, because everyone's got rate lock-in. Right, we had these 3% mortgages. No one wants to let those mortgages go because they know that, hey, your payment's going to double for the same house. One of the interesting ideas that's been floated, which I hope they push through this year, is the idea of mortgage portability. A lot of other countries have this. Like my wife is Norwegian, and if you have a mortgage and you like your mortgage on your house, when you buy a new house, you can just move that mortgage and just change the collateralization from one house to another house, as long as it appraises and all that. So if we get that this year, plus we get some rate cuts, plus some of the other things they're floating, giving people the ability to use their 401k.
I saw that.
To invest in the down payment on a house. That is really cool, because then, like, I got multiple people on my team here, including Josh here, that wants to buy a house this year. I mean, you can throw cash in your 401k, and normally if you pull that out early before retirement, you're going to pay huge fees. But then, if you could just save up for a down payment on a house, and then pull that out from the 401k to put to a down payment, now you can basically save up for the down payment tax-free.
Yeah. And that I've always thought, like, why hasn't that happened earlier? Because, on the flip side, you have people that are, converting their old 401ks into a self-directed IRA just so that they can invest in real estate. But then obviously that has to be like arm's length, right? But it's kind of like the same theory, where you should be able to use your retirement funds towards something that is, equity building, right?
Yeah. Which, I mean, for the average American, most of their net worth is tied up in their house. We're now seeing more equity than ever before, because we pumped so much cash into the economy. That's what happens. But yeah, I mean, the house should be looked at as investment. Do you think in the future we're going to have a lot more like fractional ownership of houses? Do you think that's coming? Of single family? I know on the multifamily, there's syndications or all of this, but do you see that like being a thing on single family?
I think so, especially, with affordability being such a big topic. Like, I also think, because of that, right? Like companies like PadSplit and the idea of co-living, like that's also been on the rise, where, it's not exactly co-ownership, but, now you're sticking 10, 20 people in a single family house, because that's the only way that, you can survive, right? So can you turn that into a co-ownership model, right? Like I think it's like, because there's such limited supply and, people have to get creative, and affordability is such a big issue, I do think, co-ownership in single family homes, it's going to be more and more popular, whether you're actually living in the home together, or, you're making living choices that are separate from your investing choices, and you decide to co-own from an investing perspective.
Yeah. I mean, housing prices is just ridiculous. It used to be that the average American would spend like 3 times their annual income on a house, and now it's 7 times annual income. It used to be that the average first-time home buyer was in their early 20s. Now the average home buyer this year is 42. The average first-time home buyer. If you look at the average home buyer in general, it's in their 50s. Like literally. It's the boomers that are buying all the houses. Young people are not buying houses, especially here in Palo Alto. I did a reel the other day where I said, if you make $150K a year, I'm sorry, you're basically broke, right? And it was very controversial because, and my argument, by the way, was that we shouldn't tax the first $150,000. We should, but we rage bait edited it a little bit to make it just seem, a little bit more insulting than the actual full context of it. But my point was, like here in Palo Alto, I mean, this house that we're filming at right now is tiny. In Virginia, this house would be about 800K. Here, it's over 5 million, right? When we were looking for rentals for some guys on my team, like just a background ADU studio
Yeah.
goes for 4 or 5 grand a month. Like, it's insane.
Yeah.
Like, you got to make 150K a year. The poverty level in San Francisco, 140K just to meet the poverty level.
It is
If you
batshit
make less than
crazy.
140K a year, you can get food stamps. You can make 100K a year and be on food stamps.
It is unbelievable.
So it really depends on the city and like where you're living, but yeah, definitely costs are completely gone haywire. And my hope is that like AI is going to be a little bit deflationary and start bringing down the cost, but we'll see how it plays out. What's your take on AI? I did a few classes here at Stanford. The first day I got into class, I was sitting beside a guy who was on the leadership team at Instagram. He was on the Facebook growth team for a while, and he did really well there. And then the CEO of Instagram pulled him over to Instagram. And he was telling me that a couple years ago, he would have like 5 junior level interns or beginner programmers that, they come up with the scope of work. He would assign it to them. They would go code for a couple weeks, commit their code. Then he would review it, fix all their mistakes, give them some feedback. And then, once everything was good, ship it to production. He said, today I don't have 5 interns and junior level engineers. I have an AI. He's like, and we are Meta, so we have infinite compute. Like, we have our own custom models that are way bigger that can run for hours and hours on end. He said, now what we'll do is we'll come up with an idea for a project. We will go really granular on the requirements for that project, writing a scope for the AI. We'll kick that off before we leave for the evening. We'll come back in the morning, and the whole thing will be built. The thing will code all night, and the whole project will be built the next morning. Then instead of reviewing junior engineers' code, we're reviewing the code from the AI and just making tweaks to it. Are you guys, first of all, are you guys doing that? And I know you have other tech founder friends. What's your take on it? Do you think a year from now, everyone's just vibe coding everything?
I think people are already vibe coding everything. Like,
that's what I think. Like, literally everyone's vibe coding everything.
They're already vibe coding everything. Like, some of my best friends, they actually work at, some of the best AI companies right now. Like, they work at Cursor, places like that, right? Where they're literally building the AI tools. And, how they do things is they vibe code, basically prompt to write the code. And then they then evaluate whatever is generated and then make the tweaks and all of that, right? So it's basically like all of the actual coding is done by AI. But what I think is really interesting is because we lived in the world before AI, we know like what is AI slop versus what is not, and how to turn AI slop into non-slop, right? Like, because we still have those hard skills ourselves, which is why I think, in the workforce now, you still see all the more senior people
are making way more money.
Yeah, they're making way more money. They're, highly employed, but then, the interns, the junior folks are being replaced by AI, right?
Yeah.
So then, I'm now thinking about the people that are going through school right now and, they have AI to generate slop for them. I'm like, how do they ever get educated on what's good versus not? Because they're just having someone think on behalf of them. So then what happens, let's say 10 years from now, where the senior people in the workforce today, they're retired, right? And then you got junior people that are today that never actually experienced anything. Like, how are they gonna, AI better be so good by then where it's not creating AI slop.
I think it will be though, because like I remember I started vibe coding like maybe last fall. And at the time, or maybe last summer, at the time, like if you like basically all it could do is like basic stuff, like move a button, change the color, maybe create a table, whatever. Like you could only give it like maybe like a 2-minute task versus now with the new models, you can literally have them run for hours and they'll design UIs that are better than most like graphic designers. They still do some janky shit, but if you think about the exponential, like how far they've gone just in the last year, like we've only had ChatGPT for less than 1,000 days. 1,000 days from now, like I don't even know if we're gonna have engineers. I think it's gonna be like all AI. What do you think?
plateaued, though. It has plateaued.
You think it's plateaued?
Yeah, it definitely has plateaued recently where, you don't really feel the next version is significantly better than the previous. Sometimes it's actually even worse.
Yeah.
I think, as an industry, it's definitely hit some level where it needs a breakthrough. And, some of the things that I've heard from some of the AI researchers is like, the way that AI has been built out of LLMs, it has a limit and we've
Yeah.
kind of hit the limit now. And for this to be substantially better, you have to rethink everything.
Yeah.
But that's also very complicated because you have corporations like ChatGPT, and we're obviously in a capitalist economy where it's not as easy as saying we're gonna start from scratch and redo everything, right? Like, so that's why there's been this friction where it's like, how do you actually go to the next phase without removing everything and all the capital that you've spent to get this far?
Yeah. I mean, the head of AI at Facebook has famously said that LLMs are going to be a dead end.
Yeah, exactly.
Yeah. And then you got Elon Musk on the flip side of things, and he just tweeted a couple days ago that we are in the singularity already. Like, it's like shit. What do you think is going to happen to unemployment, though? Do you think unemployment's going to go up?
I think people have to find ways where, I don't think AI is here to replace people, but you
Yeah.
need to find a position where you have some unique skill set or mind power where AI is your leverage and, you're not getting replaced by AI, right? Which is why a big question mark for me is, I think in today's state, there's still opportunity to do that because people have been trained to be in a position where they can still be of higher mind power and they can use AI as a tool.
Yeah.
Right. But what does that look like in the future when, the current generation that is supposed to be in training is
not trained.
not trained.
Yeah.
Exactly.
Yeah, especially in like, I don't know, like the medical field and like the legal field. Like I met a kid the other day and he was just starting legal school. I'm like, that's a horrible idea.
Yeah, exactly.
Because like the law firms are not hiring junior lawyers anymore. Like they're just not doing it. They're just like, why would we do that? We have LLMs. We can just have LLMs do all the research that a paralegal or a legal intern normally would do, and it's something that it would take them a week to do. We can now do in seconds. Yeah, augmenting your own skills with AI is definitely going to be the area to focus. I'm excited, but I think you're going to do very well this year because my thought is, yes, you will have unemployment going up, but at the same time, I'm an optimist. I think that the amount of output, I see it on my team, I see it in all my friends' companies, the amount of output now that one person can produce with AI tools is so much more than it was even a year ago.
Absolutely.
We just had almost 5% GDP growth in Q4 last year. Scott Bessett came out at Davos yesterday and he said, we're expecting GDP growth in the 5s this year. And by the way, if we keep rates down and we actually decrease rates, we're going to be in the 6s, which is insane. Like that's like China during the boom type growth.
Yeah.
On the United States economy, like 6% GDP growth is phenomenal. And if you compound that over a few years, like there's definitely a lot of wealth and prosperity that we're gonna run into in the next couple of years. They just got to they got to fix housing. Like housing is like, especially California. I gotta ask you this: you lived in California your whole life?
Yes, my whole life.
What do you think about California? Do you think so? I dabbled here in California. We came in. I've actually only been here probably for like a month or two. But we came in. And I was gonna try it because I was like, you know what, this is like the AI era is like the new .com boom,
Mm-hmm.
and I want to be where the action is. So like I came out here, and I was fully intending on this being my base for the next little bit. And then I did a couple social media posts, and my attorneys and my bankers called me up, and they were just freaking out. They're like, please tell me you didn't get a driver's license or do anything permanent. I'm like, what do you mean? They're like, well, first of all, you qualify for something called QSBS, which gives me $10 million exemption, but I can do something called QSB stacking, which for me, when I sell my company, the first like 40 million would be tax-free.
Mm-hmm.
California is the only state that doesn't have that. They're also now this year proposing a 5% wealth tax. And they're even talking about taxing people for 10 years after they're leaving. So they're like, yeah, Robert, you got to get the hell out. So we're actually we're getting the hell out next week. What do you feel about California? Like, is there hope for? How do you like living here? Is there hope for California, or are they just gonna completely screw the whole thing up?
Oh, that's such a tough one. I do think people are different when they are raised in California in terms of, I mean, even being an opportunist, like I definitely feel like I'm an opportunist. I feel like I got that because I grew up in California where
Yeah.
everyone around you, right? Like your parents, your friends, your friends, like
So many smart people. Like the guy literally across the street here, he sold Elon Musk his first servers when he created before PayPal, the company before that. And then the guy 3 houses down created the computer mouse. He invented the computer mouse. And then Mark Zuckerberg's first house is actually right across the street here, literally on the same block
yeah,
where he first moved from Harvard to create Facebook. Like the amount of brain power in Silicon Valley, especially in Palo Alto, there's no place like it in the world.
exactly. Like that is just impossible to beat. And there's always that saying, right, where it's like you're the average of the 5 people around you. Well, here it's like you literally put yourself in the middle of that where the entire environment which is around you is this insane, group of people, right?
Yeah.
And I think naturally that makes you sharper, it makes you more aware, and it drives you to do greater things. So I feel like that part, it is really, really hard to beat.
Yeah.
Yeah.
Yeah. So you think the juice is worth the squeeze?
I think so.
The juice is worth the squeeze.
Yeah. Or,
Yeah.
squeeze it now, and then once you've squeezed it to the max and figure something out later. That's my hunch.
Move out right before you sell.
Yeah.
Go to Texas. Yeah, the Google co-founders just moved to Texas last month. That's crazy.
Yeah.
A lot of people are getting out because they're worried about this wealth tax, taxing not on earnings but on like the total value of shares. Yeah.
Yeah, it is crazy. But then, I mean, like same thing, right? Like if you say, "Hey, I'm an Ohio AI company," like who would take you
No one
seriously, right? It
cares.
just like, doesn't make any sense. Yeah.
Yeah. The question is, will there be? I wish that they would just be normal, right? Like California collects, I think it's 2 to 3 times more per person in income tax than Texas or Florida does. And arguably probably offers like a lower level of services. It's not a amount of tax collection issue. It's a spending issue. For some reason, California can't get their spending right.
Yeah.
So I think if they just fix that, like California would be. It's my favorite state. Like you got everything here. You got beaches. You got mountains. You got the smartest people in the world. You got history. You got Stanford University right here. You got Berkeley across the street. I wish I could stay here, but unfortunately, my bankers are like, no, the juice is not worth the squeeze for you.
We'll give Gavin some feedback.
We'll give him some feedback. Gavin Newsom, if you're watching this, cut the spending. Stop spending money on stupid shit. Yeah, maybe I hope they fix it. If they fix it in the next few years, I'd definitely be back. But yeah, they're just going a little crazy with their tax policies. Okay. It is getting freezing out here, and I don't want to freeze you in your short sleeve. So let's bring things home. For people that are watching this right now, how can they, let's say they've heard about your app, they're interested in either coming on as an investor or they're coming in because they want to go raise other people's money for the first time. What advice do you have for them, and what could they do to figure out next steps?
Yeah, my advice is going back to building a public. Everyone should have started raising capital yesterday, right? And that means telling your story, going to people around you and priming them about what you're doing and how there's opportunity to work with you. And while you're doing that, definitely come to fractional.app. That's where you get started. And I'm building in public too. And I love doing that. I love telling my story. So find me on social media. My handle, I keep it California for everyone. It's Hella Stella.
Hella Stella. I love it. Love it. Well, thank you so much for coming on, Stella, and sharing a little bit of your journey. So impressive what you've accomplished in such a short period of time. 0 to $100 million valuation in 4 years. Over $400 million of capital raised for some of my really good friends like Steve Trang and Pace Morby. Absolutely phenomenal. I think we're going to see incredible things from you. in the years ahead. So thanks for joining us, guys. If you found value in this episode, make sure to drop a comment below. Stella, will you watch the comments if anyone has any follow-up questions?
Oh, I definitely will. So if you rage bait me, you might see me there.
Okay, I love it. Guys, thanks so much for joining us. I know we've taken a little bit of a hiatus from the content, but we have 4 more episodes we're filming next week. So stay tuned, hit the subscribe, hit the notifications. You know the drill. We'll see you next week.